Right, that's 11 o'clock. It's time to start a webinar. Thank you very much for joining us for today's webinar. Today's webinar deals with profit center accounting. The audio for today is going to be part of the broadcast stream. We don't have a dial-in option. That's because the last few webinars we've had, nobody's actually used it. So if you'd prefer that we did, let us know, put it in the chat box, send us an email, and we'll make sure that for the next webinar we've included a dial-in again. Okay, if you've not joined us for one of our webinars before, on the webinars we're focusing on business requirements, not on software features. Today we're looking at the requirements for financial performance, looking at that in different ways. So what we're going to be doing is exploring the operational requirements that you have, the software capabilities, how they support that. We're going to be illustrating differences where appropriate between different products that we provide. So on the Online 50 platform, we've got both Sage 50 accounts and SAP Business One, which will be looking at what they do to support profit center accounting. And of course, the whole point of that is to empower users to make appropriate choices. Today, we're looking at profit center accounting, which is related to job costing. It's not the same thing exactly as job costing, so we're going to explore some more of the job costing features in our next webinar, which will be the last Thursday in July. More about that later. We're going to crack on. Profit center accounting is looking at financial performance in different ways. What do we mean by different financial performance? What do we mean by that? It's going to mean different things to different people and in different situations. It could be full financial statements. It could be separate P&L statements. It could be just looking at margin contribution. So the topics that we'll look at today will help you look at all of these. I think it's fair to say that normally when people talk about profit center accounting, they're talking about separate P&Ls. So how do we go about getting ourselves set up to do profit center accounting? Within the information system, we need to understand the information we want to get out of the system so that we can design the system to provide that information to us. So the first thing to do is properly define the ways in which we want to understand the business. Once we know that, we can then make sure that we can capture the data we need for the system to turn that data into information. So to illustrate that, we're going to talk about an example scenario. So we'll talk about a business, we've called it Widgets on the Web. It takes most of its orders on the line. That's not unusual these days. They've got different websites promoting the business into different market sectors with slightly different brands, and they also allow other people to white label their website. They get some of the information they need from the website engines themselves, but it's unlikely that they'll be able to get full financial performance information. So the website is obviously going to be tracking orders and can do lots of useful things with analysing orders, sales analysis, that kind of thing. But it's not going to be able to track properly apportioned costs. Most websites don't have sufficient stock tracking capabilities in order to be able to properly provide cost of goods sold. In addition, they've got apportioned overheads, promotional costs, staffing costs, etc. None of those are going to be in the website. So we're going to need more than what's in the website. Because they're white labeling the site, they've got their own sites, they've got other partners providing websites as well. They may want to analyse performance of their own sites versus white labeled sites. They might want to look at a performance of an individual site against others in its own group, against the overall of the group, etc. Now this is just one example scenario we've pulled out so that we've got something that we can talk about to make it kind of more tangible. Your own situation, of course, may well be different, so you'll need to think through what's required for your situation. If you'd like to talk about your requirements, then obviously don't hesitate to let us know. We'd be very happy to do that. There are 2 points that I want to bring out of this specific scenario that we've talked about. The first is transaction splitting. In the case where a single accounting transaction needs to be allocated against more than one entity, so websites in our example, it's usual for this to be split into separate transactions with each one allocated against a single entity. So for example, for our scenario, we might be looking at the cost of website hosting. If we've got several websites all hosted together, then we're going to get one invoice to cover all of the websites, but we need to allocate that across the websites. So let's say the invoice is £100, we've got 10 websites, we need to record £10 against each website. So that's splitting the cost across multiple profit centres, and normally that means you've got one entry per transaction on the line. Okay, so that's our example there, £100 for 10 sites, £10 per site, pretty straightforward. Okay, the next issue I want to talk about is orthogonality. Now, I don't even know if that's a proper word, so I apologise for that. The word orthogonal is used quite a lot in data science. It's borrowed from mathematics. And what we mean when we say two things are orthogonal is that changes in the two entities are independent of each other. So that means that if one entity changes, it does not create changes in the other. So if we plot a graph here with the x-axis, on the x-axis y is always 0. On the y-axis x is always 0. So that means that moving along the x-axis, the y value doesn't change. And moving along the y value, the x-axis, the x value doesn't change. So they are orthogonal. So that's what we say when we mean orthogonal. In our scenario, we talked about having the website and the website belonging to a group. Now, because the website is going to be part of a group, if we change website, we may well change group. So website and group are not orthogonal. So knowing which of the different ways in which we want to analyse our information relate to each other, knowing which ones are orthogonal helps us choose how we record transactions. So in our example, because the website is always part of a group, we don't need to record both the website and the group. If we've got the website, we should know what the group is from that. We do need to be able to determine, of course, which group the website belongs to. So our first task is to understand the information we want out of the system, and in particular how we want to select and compare that information. I'm going to introduce another term. We're looking at the different ways we can compare information. We're going to use the term dimensions of analysis. It's up there on the screen at the moment. The idea is, just like a two-dimensional plane with two dimensions represented by x and y coordinates, we need to use appropriate dimensions of analysis to record the data necessary to obtain the information we want. Usually we'll want to choose orthogonal dimensions of analysis. Sometimes we may choose to use dimensions that are not orthogonal. So in our example, we might choose to record both the website and the group against the transaction, but we shouldn't need to. If we choose to do that, then we may have to take precautions to prevent the user entering the wrong combination. So if they record the website and the wrong group, we need to be able to spot that. Once we've determined what we're recording, we need to look at how we record that in the system. So in the system, we need to be able to tag each of the transactions for the dimensions of analysis. So one tag for each orthogonal dimension. So in our example, website, because the group, which we also want, is determined by the website, they're not orthogonal. Our second task is, so remember the first one was understanding how we want the information out, is now to choose how to record the data we collect given the tools available to us in the system we're using. So how do we tag the transactions given our choice of back-end system? We're going to be looking at the options that are available in the two packages. We've got particular specialization in here that are available on the Online 50 service. So that's Sage 50 accounts and SAP Business One, and we're going to be comparing those. Of course, for every transaction, we're going to record it against a nominal ledger code. Nominal ledger code is going to be a dimension of analysis in its own right, but often that's overlooked. So if you think about a cost incurred for a website, the nominal code tells you what the cost is for. So the example we gave earlier, website hosting, that will go to a specific nominal code. So nominal code is going to be a dimension of analysis, but normally it's taken as given that we've got that already. You could, of course, use lots and lots of different nominal codes. So, just make your nominal codes longer and extend options on each one of them. That is an option. You can have some problems with that in terms of constructing your chart of accounts, because obviously you need to make sure you retain the integrity of that. Also, if you want to select separate nominal codes for reporting, most packages won't allow you to only report a portion of the chart of accounts. You've got to report all the codes in the chart of accounts. So that may not be an option for you. Occam's razor, so this is often interpreted as keep it simple. Occam's razor applies. Try not to make the way we capture the data unnecessarily complicated. So if we want to record the why, we need an extra dimension. So we spent money on website hosting. Why did we spend it? Which of the websites was it for? Then we need an extra dimension to record that. Now, I did mention you could create additional nominal codes, and that nominal codes are a dimension. In some systems, it's possible to segment the nominal ledger. So you can't do that in Sage 50. I think in Sage 200 you can have two segments enabled. SAP Business One does allow segmentation. We'll talk about that in a minute. And what that allows you to do is build up a composite code which the system understands. The first portion is, if you like, the nominal code, and then the next two segments here are additional dimensions of analysis. So if your system supports that, then you can use those for additional nominal codes, additional dimensions of analysis on the nominal code. Right, we're going to look at what's available in Sage 50 in terms of the tags that are available. So Sage 50 accounts, very popular. It doesn't, as I mentioned, support using segments in the nominal ledger. It does provide the ability to record a department code against each and every transaction. I've listed it as soft. What do I mean by a soft code? Well, a nominal code is a hard code. You must post it. It must be valid on every transaction. You can't post a transaction without specifying the nominal code. But you can post a transaction without specifying the department. So because of that, the department I've called soft. When you enter the department, it isn't valid. It isn't validated by the system. You can use up to 1,000 codes, 0 to 999. We recommend you don't use 0. That means you can find all the transactions that are posted with 0, which may mean they didn't have a department entered, and if necessary you can allocate the correct department on it. So yes, soft code, it's not mandatory. You can't make it mandatory. Some of the newer versions, so this has been in for quite a few years now, also support project and cost references. So you can enable project references. That allows you to assign a project reference to most transactions, not all transactions, bizarrely not transactions which are product invoices, which does seem a bit strange, but you can't do that. You also have a cost code. Cost codes are completely independent of the nominal ledger, so orthogonal to the nominal ledger, which means you could post something saying you've bought stationery but record it against the cost code of labour. It will allow you to do that. All the cost codes are common across all the projects. A couple of good things about projects: you can give a project a start and end date, so there's some validation against whether or not it's valid, and you can also record a customer against the project, which obviously can be useful. Departments and project codes can be used together. They're orthogonal to each other and they're orthogonal to the nominal ledger, so you can choose any combination of those that you like. Also, if you've enabled the charity features, obviously there are charities who need to do this kind of analysis, looking at performance by a different area. You can enable charity funds, and the charity funds allow you to tag transactions against a charity fund. You don't have to tag all the transactions against charity funds. Bizarrely, not even when you record a donation using a sales invoice do you have to record a fund. But if you do record it, it is validated, so that can be useful. Okay, we're going to look at what you get in SAP Business One. So I mentioned earlier, SAP does support segmenting the nominal ledger. So if you do that, then your nominal ledger can have up to 10 segments, so the initial natural account code portion plus a further 9 segments if you need it. Because this is a nominal coding, it is hard. You must enter a valid combination and each transaction must have a nominal code. If you've enabled it, then because you have to create them in advance, you can specify which combinations are valid. You don't have to create every combination. You can do, of course. If you do, then obviously they're fully orthogonal because you can have any combination. But if you want to restrict what combinations are available so they're not orthogonal, that's something that you can also do. So in the screen we looked at previously, we had 420000, I think it was, next segment 00, next segment TBW. So we could have combinations where you can have 00 with, let's say, TBW and LZ6, but you can't have 00 with RHY, whatever those might be, because we've not allowed that combination. So that allows us to specify non-orthogonal valid options if that's important. It also allows us to specify project codes, is what they call them. They work very similarly to departments in Sage, except they do have valid start and end dates. They're not numbers, they're alphanumeric codes, so that some people find more useful. They can be soft, or on certain nominal codes, you can say this nominal code must have a project code assigned when you post to it. So that means that you can say for specific nominal codes, you must always have a project reference. That's quite a useful feature. Often, as I said earlier, you don't need to do complete breakdown of all nominal codes, but there are going to be certain nominal codes that you do want to get the analysis for, and often those are going to be the sales codes and the direct cost codes, giving you proper margin contributions by each of those analysis tags, project codes we're talking about here. In addition, you can also set up nominal ledger dimension tags. So the nominal ledger dimension tags create up to 5 additional dimensions on the nominal ledger. They work very similarly to the project codes I've just mentioned. In addition, they have something called a distribution rule. So in the same way with a project code, you can say this nominal code must have a dimension code assigned to it. The dimension code must be valid. The distribution rule, I think, is a slight misnomer, I think. The idea is that you can record a code which has rules against it for distributing the costs. So in our example, we've got 10 websites. If we want an even apportionment of overheads across 10 websites, then we'd set up the rules to say 10% goes to each website. When you post the transaction, though, it doesn't post it to the 10 websites, it posts it and tags it for the distribution rule. Is this a problem? Well, it's not a problem if you're using the standard built-in reports because they understand how to interpret the distribution rule tags. But if you want to do reporting outside the system, you'll be getting transactions back tagged against the distribution rule, and you'll then have an extra step to distribute the value across the member code. So does it do distribution? Yes, in the core product, but not actually in the database, which is why I think it's a bit of a misnomer. Can be very useful though, so handy feature to have. Also, you can enable branches. If you enable branches, branches must be specified on all transactions. So it's a hard code, and obviously the branch must be valid. Each nominal ledger code can be assigned to a single branch or to any branch. So if you have a nominal code which is tied to a specific branch and another nominal code tied to a different branch, it's not possible to journal directly between the two. Now that's because, unlike the other dimension tags that we've been looking at, the branch exists as the same branch on all related transactions. So if you put in an entry, so think about an invoice, it's got multiple lines on it. Each line creates a posting to the ledgers. Each of those lines can go to a separate nominal code, it can have separate project codes, separate dimension tags, the cost codes associated with those dimensions. But the whole invoice must be tagged to the same branch. So if you want to enter a journal from one account to another, the journal are related transactions, the whole journal must be on the same branch. So you can't journal directly between two accounts which are tagged specifically to different branches. That's the key area where they're different. They can be very useful. We've got customers who use them, very useful if used in the right scenarios. You just need to be aware that not everything is equal. So we're just going to have a quick summary of where we've got to in the two systems, looking at the ways in which we can tag data. So Sage 50 accounts. We have departments, we have projects, we have charity funds. In SAP Business One, we can use nominal ledger segmentation. So that's up to 10 segments. You've got the nominal code plus 9 additional ones. So if you like, that's 9 extra dimensions hard-coded in this nominal ledger. We can have project codes, which work similarly to the departments. Nominal ledger dimensions, quite similar to project codes with this added feature of distribution rules. You can have up to 5 dimensions on the nominal ledger, plus the projects, plus the segmentation if you want. And of course you can also have branches, as I mentioned. Okay, so that's a summary of the core features we've got for separating the information that we enter, tagging it for the different dimensions of analysis, which is what we're going to need to do if we want to get any useful profit center accounting information out of it. Before we go on and look more, we're just going to have a look at a got a minute video showing us how to enable some of these features. Okay, so the got a minute videos are coming up now.
Welcome to this Got a Minute video on project costing. To create projects in Sage, the project costing option needs to be enabled. Now I'm going to show you how to create a project so that we can distinguish between different products. And I'm going to call this project Useful Gadgets. And where it says customer details, it is fine to leave it blank, as you might have a project that's allocated to more than one person. I am now going to show how you can create an invoice which links back to your chosen project. Once this is updated to the ledgers, it will appear under the project activity. On the invoice, there is a cost code option. You can create your own cost codes and cost types if you wanted by choosing settings and then configuration.
Okay, so that was how to enable those features. We're going to look at how to use the information we're collecting, but I ought to say something about analysing revenue. Analysing revenue is, of course, one of the key things that we'll want to do for profit centre accounting, and often all we need to do is analyse revenue. That's all we actually really need. There are different ways to do this, but normally using product codes to help you analyse sales is a sensible option. So with SAP Business One and Sage 50, you can use product codes, issue invoices and sales orders with product codes on them. You can then perform analysis based on those product codes. So you can have sales going to the same nominal ledger account, which makes sense for your management accounts, but if you want to get a breakdown of sales, you can get information from the product codes if that supports it. So often it's a very sensible thing to do. Sage 50 does not allow any extra analysis to be stored against the product code. One trick you can use, which you've used before, is to use multi-level product code. So you break your product code into sections and then you can interpret that product code based on what's in the sections. SAP Business One does give some additional support for product code, so each product can be a member of a group, a single group, but there's also 64 yes/no flags that you can set on each product, so that when you want to report, you can select the report based on those properties. It's worth pointing out this issue of non-stock products. It says there, so both systems will understand that you will want to use product codes to tag a sales item, but this isn't actually something you're controlling stock of. So you don't have to run stock in order to use product codes, but if you have the code, then you're able to use that for analysis. So in the example code there, that's one of our own product codes. As you know, one of the products available on our platform is SAP Business One, which we sell under the Ambition Enterprise brand. There's several components of Ambition Enterprise. So this code AE shows us that it's an Ambition Enterprise product group. ASP is a software license. B1, it's for Business One, and Advantage is the software level. So we sell a license, Ambition Advantage, which is part of the Ambition Enterprise family. This is the product code for it. There are other product codes with similar breakdowns. We can then extract information from those codes, and that can help us understand sales based on what's being sold. And of course you get quantity plus revenue. If you're booking costs of items through, again, they don't have to be tangible products to have a cost. You can buy intangible products on a purchase order, for example. You can have margin information as well and break it down by code. So it may be that using product codes is going to be enough for the analysis that you need. Okay, so once we're set up to capture the data that we need to make sure that our users are equipped to capture that. So we've designed how we want to capture it. We understand what information we're going to get, but we need to have useful information out. So if we want useful information out, we've got to make sure we've got accurate information in. Garbage in and garbage out is a well-known saying in the IT industry. So make sure that users know how to record the data you want them to do. Make it easy for them to capture the right thing. If they're not sure, make it easy for them to leave out the tags, but so that you can find them. So identifying the missing tags. Generally, it's much easier to find transactions which haven't been tagged than transactions which have been tagged incorrectly. So make it easier for yourself by setting up the system to work with you and help your users to do the right things, and if they don't, help you to then find that they haven't done it. It's important, obviously, with the quality of the data coming out, that the quality of the data going in is going to be correct. Both Sage 50 accounts and SAP Business One store the underlying data in a database. That database provides a range of tools, some inherent with the database, some built into the platform. So let's see at what you get in each product for getting information out of the database. So we've got Sage 50 accounts. That provides you with a report designer. There's also a feature which is becoming increasingly popular, Excel integrated reporting, which allows predefined reports to be loaded into Excel, and it includes an ODBC driver. The ODBC driver has become less popular recently, but actually using that is the key to connecting more powerful analysis tools, as we'll see in a moment. We're not actually going to consider Excel integrated reporting for this because although it can be very useful and it gives an easy way to dump predefined reports into Excel as a starting point, you can't define your own information for it easily. In fact, I don't think you can define your own information at all. So because of that, you can't use it to get the information out. You can use it to get a predefined set of information and then manipulate it in Excel. So what do we get in SAP Business One? SAP Business One is going to give us Crystal Reports, a very popular report designer, which is widely used by lots of other programs. So kind of an industry standard, if you like. It also includes on-screen queries, so we can specify queries in the system. Users can then go to a screen, load up that query, and get a real-time table of information from the database that can be predefined for them, so they don't need to know how to do that. Interactive dashboards, so built into the program, you can have, for example, KPIs. You click onto the KPI to get to underlying information. You can present graphs and tables and all that kind of stuff. Analytics, so this is where you have I guess it's leveraging what they can do with the dashboards. You can add to any record, so to a customer record, for example, you can add your own analytics directly onto the customer record for the information that you're interested in. And of course, again, it has an ODBC driver. So the ODBC driver is going to be what is going to connect us to the database, and the database is going to allow us to extract the information that we need. So we're just going to have a look before we look at the differences in the underlying databases. Remember, the data we're interested in is stored in the database, so in order to use it, we've got to get it out of the database. So we'll need to think about the differences in the database. Before we do that, we've just got a very quick demo of one of the tools you get provided in Sage, which allows us to produce our financial statements by department, and we'll just look at how straightforward that is to run. We're not really going to cover this in more detail today because it's a standard presentation of information. We're much more interested in getting out information that is bespoke to what we need. Okay, so here comes the video.
Welcome to this Got a Minute video on profit and loss reporting in Sage. What I'm going to show you first is how to generate the standard profit and loss report for the month of January 2014 with the brought forward figures. Here you can see the structure of the income statements layout or the profit and loss layout with the period and year to date figures. Now we can look at the departmental profit and loss report, and we will use the previous year date of January 2014. For this report I've chosen all departments, but you can specify which department you would like to look for example admin, accounts. And that's profit and loss reporting in Sage.
Okay, so that was looking at the standard profit and loss report in Sage 50 accounts for departments. Since both Sage 50 accounts and SAP Business One use a database to record the transactions, any tool which can connect to that database, which is why that ODBC driver is so important, is going to be able to extract information to give us the useful information we're after. What tools are appropriate for you is going to depend on a number of factors, including the volume of data you need to analyse, the type of information you want, and how you want to be able to present that information. For today, we're going to be showing how to use Excel to do some of that interpretation because it illustrates some of the features with regard to tagging. Once the data has been extracted and we've got it in Excel, we can use all the features of Excel to work with it. Before we look at the interpretation of the data, I think we just need to spend a little bit of time talking about the differences between the databases. The performance of the database becomes more important when we're trying to access data in real time, and also the volume of data makes the speed of the database more important. Typically, databases are designed to have peak performance when asked to select data based on the values of certain fields which are indexed. By using the database indexes, we get the best performance. The obvious corollary to that is if we're trying to make a selection based on fields which are not indexed, the database will not perform as well. The difference in performance becomes more pronounced as the number of records that have got to be processed by the database increases, or not necessarily by the database, but by the application that's looking for the data. If the field isn't indexed, typically the database can't save you much time in terms of processing that. So we're going to have a look at the database considerations. Sage 50 accounts, it has a proprietary file-based database that's used by Sage. There was work a while ago to produce a new product that would give the same features as Sage 50 but run on a kind of a proper database backend. That product was dropped with no official explanation given. Typically, the Sage 50 database is running on a separate machine to the one that's trying to access it in a network environment. That's going to be the case. The data, there's no database engine running as such. The data is on one machine. You're trying to access it from another machine. That means that in order to access any of the data or any of the indexes, you've got to access it over the network. Because it's this proprietary file-based database, it has a fixed definition both for the fields and for the indexes. So SAP Business One, we provide that on our platform running with SAP's HANA database. It is possible to run it on Microsoft SQL Server as well. So why HANA? Why have we chosen HANA? HANA is extremely advanced. All the data is in memory, not just indexes. Everything is accessed from RAM, which makes it really quick. It also has column stores. So the column stores optimize the data for retrieval. Makes it slightly slower to write, but because everything's in memory, it's really quick to write anyway, so you don't notice that. And also, if you've got demanding workloads, there is a service layer, so you can actually move the code that's going to be processing the data onto the server where it's got all the data in memory, so you can optimize it for speed of access. It is adaptable. Users can easily create their own fields to add to most of the records in the database. That gives you additional information you can store that's pertinent to your business that would not be in a standard system. And crucially, for the type of work we want to do with profit center accounting, effectively every field in the database is indexed because of this issue with the column stores. Because the data is organized for retrieval, effectively every column in the database, every field that you want to look at, you can select on as quickly as any other field. So it makes it really, really quick. Okay, so that's a bit of background information. We're going to be having a look at an Excel spreadsheet we've put together. So what's in this Excel spreadsheet? We've got some data that we've extracted. We've coded it up to represent the kind of information that we're looking for. And I'm going to talk you through the spreadsheet, and we're going to run some information off it. And just let me find it. Hold on. I'm just going to talk you through what's on the spreadsheet. While I'm doing that, don't forget you can, any questions you've got, a few have already come in, any questions you've got you can enter in the chat box. If you can't see the chat box, there's a little chat icon on your software, and then we can run through Q&A at the end. There might be a few questions with this. Okay, so there's a whole load of transactions here. This is a big spreadsheet, as spreadsheets go, 350,000 rows there. This data actually we've pulled in from Sage 50. There should be audio. I'm being told people can't hear me. The sound has gone. Okay, it's back? Okay, my apologies for that. I'm not sure what happened there. If there are any more problems, obviously let us know and we'll get straight onto that. So, this spreadsheet, we've brought it in from Sage. We decided to bring it in from Sage because we thought most people would be more familiar with the data that we've got in Sage. I'm being told there's an audio issue again. Can people still hear me? Most people can hear me. Okay. So we've brought this in from Sage. As you can see, it's a lot of data for Sage. It's old, so we're covering a number of years. We've used some of the Excel features to provide additional analysis. So we're coding the months by financial period number, as well as by month name. People are still saying they can't hear. How are we doing for sound? Does anybody? Okay, someone said okay. Can hear now. Okay, well, I'll carry on. I'm very sorry if you've missed some bits of that. If there are further issues with the audio, let me know. It's odd that it's just suddenly come in at that point. So by using some Excel functions here, we're able to present the month plus the period number plus the quarter. We've got some additional information that we're pulling out. So against the nominal code, we've said which statement it is. We've got the nominal sections and so on. Against the nominal ledger here, we've added those sections in. Against the departments, we've set up some names. We've also set a group so that we can analyse by groups. So we're going to look here. We've built a pivot table. For those of you familiar with pivot tables, this will be straightforward, but I'll quickly show you how the pivot table is used. A user with no particularly special skills can manipulate what's in a pivot table very easily. So if you can prepare a spreadsheet with the data in it, people can then query that for themselves. So what we've done is we've produced the profit and loss statement for this financial year. You can see it's broken down by the profit and loss categories. We have product groups, and over here you can see we're saying what sections we want in the rows. So we've got the financial section and subsection, what we want in the columns. So this is giving our breakdown. And if we said, for example, we don't want to have the department group, we just take that off. Don't want to have the department name. Now that's just broken down by months. We can analyse. But if we then said we now want to compare for a particular website, which is what we set our departments up as, we bring up the department name, put that in there, and now within each quarter, or we can put it at the top. So we've got the various websites here with their quarterly totals. We can change the order of those. We can also make the department filter, so we don't have to see all. We can enable multiple selections, and we can say we want to see these 3 websites, and then we've now got those 3 included in the filter. Now, because I've put it in the filter, you can see it's taken it off the actual column, but we can group however we want to. So that's a very quick view of the kind of analysis you can do once you've got information tagged. It makes it very easy to give that to people who wouldn't normally be logging into a finance system and running reports if they can get a spreadsheet usable. There are lots of other tools that are available that are very intuitive. We're just happening to show this one. We have here a graph, again based on the pivot, so we can set what we want to see on each graph. So you can see here we set a particular financial year, 2015-16, a particular section, so we're looking at sales, and these are the sales by each department. If I wanted to do it differently, what I might do, for example, is say I want to know the quarter. So by putting the quarter in here, I could then perhaps put the department up here to make it a series, and then grouped by quarter, we've got each of the websites showing their sales. So that's a very straightforward way to build a set of interactive reports. It's using Excel. Most people know Excel well, and because they know Excel well, they're going to be able to get the information out that they need, provided we've captured the information with the correct tagging, and we can relate those tags together, then they can get access to that information that they want. Now this is the same kind of way of working. You may hear the term OLAP, O-L-A-P, the AP is analytical processing. OLAP cubes people talk about, so cube has 3 dimensions, but it's being able to look at data with multiple dimensions to it. So the idea of the OLAP cube is behind a lot of business intelligence systems. A lot of the analytics we spoke about earlier in SAP Business One would also work on that basis, having the OLAP cube defined to structure the data. And to get that to work, this is obviously working with data we've put into Excel. You saw the main table has 375,000 rows, which is probably a lot for Sage, but not that much for bigger systems. To be able to work reliably with large volumes of data, you clearly need to be able to go through and process that data really quickly, which is why having the powerful database on there is a useful idea. We've also got an order graph. This is taken from an orders table, so this actually is just data we made up. We used the product codes we were talking about, so these are just some of our product codes that we showed before. We've got randomly assigned customers, departments, and then that means on the order graph we can look at for a particular month. We're only looking at one financial year. We can see the share of orders we're looking at by different departments. We may want to say an additional filter for the product subgroup. So on the product subgroup, only show me the Business One licenses. Doesn't appear to have affected the share. I could say show me the forms licenses, and looks like there aren't any. Which is why selecting the Business One didn't change that. I'm not sure why there aren't any in that particular query. Again, you can then split by month, by quarter, and so on. And again, it becomes very easy for people to be able to pull out information for themselves, allowing users to get access to that information that they need. So whether this is for internal use or providing to a client, or a reporting pack you might want to give to external non-execs or trustees, putting information together with a set of data imported into Excel, and then once it's imported into Excel, we have the ability for the users to manipulate it. It can be a very useful way of doing it, and it's tools that most people already have. It doesn't require buying into a business intelligence platform and having a lot of new things designed for you. That information is available. It's in the system. The question is, how easy can we get the information we've already got out of the system? So the thing that we've looked at, we talked about how to determine what information we want. That's crucial. There's two things that you really want a management information system for, business information system. One is to control your processes, and the other is to give you the information that you need. So we need to understand what is the information that we want out. We talked about thinking about how we want to analyse that information. Remember, we talked about whether we need both the website and the group. What we've done here, we've set the website according to which department number is used. Again, 0 we haven't given a website to, and then we've said which group is it, so owned sites or white labelled sites, and that then allows us in our pivot table to do a comparison of the two should we wish to. Doing that comparison obviously is very straightforward. We just take the department group. I'm sure you all know how to do this. Take department group, stick it on there, and then now we've got own and white label broken down by month. So it's very easy to get that information out, provided we can record it. We haven't had to record the group against every transaction because we know each website is only into one group. So that's what we were talking about. Are things orthogonal or not? It's choosing how we record that. We haven't had to do any unusual things for users. They are already used to entering transactions. This is using Sage data. In Sage, you just enter the department tag. If we were using, for example, the project codes in SAP Business One, it would be the same. Each line, you'd have a tag to enter the project code. We'd have the advantage in SAP that we can stipulate that certain nominal ledger codes, if they're going to be posted to, must have a project code. We can't do that in Sage. Depending on what analysis we want out, we need to make sure that we have sufficient ways of recording it. So we've had a review of what the options are both in Sage 50 and in SAP. There are more features obviously in SAP that allow us to do additional analysis in more dimensions so we can get more information out. One of the things that I've heard customers say with moving from something like Sage to SAP, I've heard it described as SAP being a more grown-up system. Everything is linked together, everything works together, all the transactions flow through. It's a more grown-up system for a more grown-up company, but the people entering the data sometimes say, but there's more clicks, because if you're capturing more data, someone has to get that put in. So it's getting a balance right between what information do we need, how easy is it for the users to capture it, can we capture it reliably? If we can't capture it reliably, is it going to be worth having? And it may not be, of course. So I've run through how the spreadsheet works. I've had a comment in that people know Excel. I'm not planning to show you Excel, obviously. It's a question of how we use the tools. So we're now open for questions. There are a few in the box which I'm going to run through. If you do have questions, obviously run through those questions and get them in the chat box, and I'll do my best to go through them. Before we post the video for the webinar, we're going to add on to the end of the webinar all of the questions that we've had, and we'll create some additional slides just to help do that. So I'm going to run through the questions we've got in order. So the first question, please explain journaling between accounts in different branches. Okay, so that was for Business One when I said you can't journal directly between accounts. So let me give you an example. One of the areas you can use branches, it's not recommended specifically by SAP, is where you have a multi-company group. Now there are some caveats with it. It may not be appropriate for you to do it, but if your situation is appropriate, then you would have separate companies represented as branches and separate companies having their own branch when you're doing the reporting. So you may well have accounts on the balance sheet, for example, a bank account, which must only be used by that branch. That would be a sensible way to do it. So if you wanted to do an intercompany loan, you can't just make a transfer from one bank account in one company to the other company. Instead, you have an intercompany loan account, and company A makes the transfer, so we credit the bank and we debit the intercompany loan account using their branch. And that means when we produce the balance sheet for the branch, when we run those transactions off, we'll see that they have a debit balance on the intercompany loan account. The other company, company B, receives the loan, so it has a credit on the intercompany loan account in its branch and a debit into its bank account. Now, so the intercompany loan account is enabled for all branches. So that means the overall balance across all branches is 0 on that nominal code, but in company A, it has a debit because it's made the loan, and on company B, it's a credit because it's received the loan, which is exactly what we want. That works really quite well. So hopefully that answers your question. Another one, can you tag transactions against multiple dimensions? Yes, you can. Each of the dimension codes that's available you can tag, but each of those dimensions for each line that you're entering can only have one value for that dimension. So for example, in SAP, you can post to a project, and if you've also enabled dimensions on the nominal ledger, you may have enabled the first additional dimension, you can also post to that, and you can post to a branch, but each one of those for each line can only have one value. I mentioned the distribution rules available on the nominal ledger dimensions, which carries a rule to allow you to interpret that, but it still actually posts it with only one code on it. Okay. When would you use segmented ledger codes? Some jurisdictions, it's more popular than others. We tend to see more people going for dimensions rather than segmented ledger codes. Segmented ledger codes can be useful, but they're fixed. Once you've got a code defined, you can't remove it because it's part of the nominal ledger. Well, you can't remove it easily. Whereas with dimensions, you can, in the same way with projects, you can say it's got a valid start and end date. With a dimension cost code, you can say it has a valid start and end date, so effectively it's no longer there. However, being able to enforce coding within the nominal ledger can be useful. So I think it would depend on your scenario as to when you might use it and when using the cost codes would be more appropriate. Just bear in mind, if you're thinking about a system, that there's more than one way to do it, or as I read on a blog recently, there's more than one way something can go wrong, but there we are. Got a question here. Is it easy to migrate from Sage to SAP Business One? Well, it can be. I think the short answer is yes. However, often when you're migrating because you want more than you've currently got in your current system. So for example, I mentioned a customer earlier who had been using Sage, they'd gone over to SAP. Why did they do that? Well, the business was growing, they had more transactions, it was taking them too long to produce management information, they had desires to continue to grow, more things they wanted to do, and Sage 50, they'd gone past the limits of the product in terms of what their business was doing. They had a fairly straightforward, that particular customer had a fairly straightforward migration. However, there was still a lot of coding to do. It's a chance to review coding of the nominal ledger, how you code all of your sales ledger, purchase ledger. So quickly this can become quite a big project. If you keep the project small and tight, it can be quite easy to migrate. But of course, if you're migrating, there's benefits that you want. So it will depend why you're making that transition and how you want it to go through. We have a fixed price basic migration to get you from Sage 50 to SAP Business One, which we call the fast track. We charge £3,000 for that as standard. There are discounts available for charities. And that allows us to take your existing system, set up opening balances, give you the right nominal ledger, get all the analysis set up, but we're not looking at large-scale data migrations because we're talking about opening balance transfers. The more work there is to do, the more transactions to recode, then obviously that's going to take longer. And of course, although we or someone else would help you with that, there's a lot of effort that the company would need to make themselves. Okay, a few comments about the audio. Can you speak up? Hopefully it's loud enough now. Okay. Somebody here saying very interested to talk about Business One. Okay, so the username that's come up asking us to contact them specifically, we don't know who you are because I think it's got your computer name on the list. So we will be sending out an email shortly with the link to the video. Okay, you've just put your name up. Thank you very much for that. We will obviously be emailing that link out shortly. There don't appear to be any more questions, so we will be running our next video webinar, at the end of July. So last Thursday in the month is when we normally do it. As we said today, we're going to look a little bit about job costing. So that's covering, it's similar to profit center accounting, but specifically we're looking at things like the quoting, budgeting, estimating, billing, all of which we didn't really get a chance to look at today. So obviously you'll receive details of that. That's on the 27th of July, last Thursday in July. So we will be sending an email out with the links. Thank you all very much for attending, for your patience with the audio. Hopefully that's been very useful to you, and I look forward to chatting with you again at our next webinar. Thank you very much, and goodbye.